Stavros Tousios for M4Markets. We're going to close the week with pound and oil. For pound, we have talked about the rejection up here and the potential downside that we might be expecting. We have had a 5-wave move to the downside that usually suggests that there is going to be further continuation in the predominant trend, which from the double top at 124.38 has been to the downside. But when we look at the 4 hours, we do see some divergence over here, which has actually provided a move to the upside. That move to the upside has not done a fresh swing on momentum, at least, and we are falling now. And that kind of starts to portray a symmetrical sort of narrowing of this range, which would or could be suggesting a triangle. And triangles are continuation patterns. So if we do consolidate for one more leg to the upside without going up here, then that would most probably complete the triangle pattern here, and then we would be looking for further downside, with of course the first levels to take into account, the 118.54, a very strong swing, but at the same time we cannot ignore the measured move. The measured move contains the largest waves and the potential breakout level. For now, we do not know where is it going to be, but the measured move gets us down to around 117. Okay, and this is of course the next level when we look at Fibonacci's anyway, around that territory, 116.46. Should the break of the 23 Fibonacci takes place. At the same time, let's not forget that is a different swing high over here, and however we get down there, and if we get, or when we get down there, this is most probably going to offer some sort of support anyway. Now when we look at the prices of oil, we have some similarities here. I mean, in comparison, not that they are fractally connected or something, but we have seen a leg to the downside. We are now in a correction mode, which is a bit more clear than it was before. And we do see some sort of, narrowing of this range, but the RSI still maintains some sort of volatility here, as you can see. And that could and might just be the case because oil is much more volatile than, of course, the pound is, and that's why these swings might be expected for a potential triangle expectation anyway, right? Because that also remains an actual triangle, guys. So if we do see a little bit more upside and we stop below the 80.62, that could imply that this is going to be a triangle and we're going to go lower. And of course we can then go ahead and use the same sort of narrative here, the same method, and find that around 64.75 or so could be the potential measured move projection, or is the potential. Well, it could be, let's say, because we do not know where the breakout might incur yet. Now, if this on the other side continues above the 80.60 or so, then we'll be returning back in this base channel, okay? And that would perhaps suggest that we're going to go and meet resistance at the top of this particular sort of top, which is of course formed by the channel, because in both in this at least case, in the first case, we saw a false break in both channels. Now we are outside this longer term channel again, right? And what we have to wait and see now is whether we're going to get another false break and return back within this channel or not. Because if we stay below and we get a rejection, then most probably we're going to see one more low down to the 70 before we see another bounce to the upside.